For more on the financial fallout and the market's reaction to Greece's anti-austerity vote, we're joined by David Nelson, Chief Strategist at Belpointe. David, always a pleasure to have you. Thanks again for joining us.
Thanks for having me.
David, we're a little surprised U.S. markets did not react as negatively to this as we were expecting. We were talking about this yesterday, finishing off the 4th of July weekend, and we were expecting carnage on the street today. What happened?
I think we had the benefit of time. On Sunday evening, when we got the no vote that afternoon, and that was a surprise. Most traders went into the weekend looking for a yes vote. It was a clear mandate for Cyprus. German futures were down about 4%. The U.S. markets were expected to open over 1% lower. However, when we woke up in the morning, we found that the Greek finance minister, I believe it's Yanis Varoufakis, had in fact resigned. And that was viewed as a positive because he's been a huge impediment to the negotiation process.
He has been seen as a bit of a troublemaker.
He has. And I think a very clear message was sent to Cyprus that from the EU that something has to change here or the negotiations can't continue.
All right, so U.S. markets had some time to digest the news as well as the 4th of July barbecue and festivities. European markets, however, also did not react quite as adversely as expected. Yes, the DAX and the CAC down between 1.5% and 2%. But all things considered, that wasn't
the Armageddon trade.
Right.
No, it wasn't the Armageddon.
What happened?
It wasn't the Armageddon trade. I guess there's a lot of confusion, and people are wondering what's going to happen next. We're in for a very confusing time. You and I were talking about this in the past. Ultimately, I think the euro is going to fail. I don't think this is going to work. I think they're going to drag this out. You can't have a common currency without a common government.
That is the key phrase that you've been saying over and over, David. Yes. You can't have a common currency without a common government. And that's not going to happen.
I don't know what they're expecting to do here. They can't capitulate to Greece because if in fact they do, it opens up a Pandora's box. Then you have Portugal, perhaps Italy, certainly Spain looking for quid pro quo. If they do that, then ultimately it will mean the euro's demise.
So the whole thing unravels if they give in to Greece.
If they give in to Greece, I think what will happen, there'll be a cosmetic, it'll be cosmetically done. I think what they'll choose to do is what they've chosen to do in the past. They will just drag it out, extend and pretend.
We're going to carry on the extend and pretend game. You say for at least, what, the next month?
Probably longer. I don't think we'll have a clear resolution for this for the entire summer.
Well, what's interesting is that with all this talk about a potential currency fail, gold didn't rally. What's going on?
I think gold really, takes its cue from the dollar, and the dollar has in fact risen in this. Gold has been a real disappointment as a safe haven investment. If there was ever a time that gold was going to work, this is it,
right?
This is it, and it did absolutely nothing. It's been a real bust for the last couple of years.
Well, what was interesting is that we didn't really see the dollar spike so much against the euro either. It was relatively flat. That was another trade that seems to be out of joint.
I expected the euro to be a little weaker than it was. I think it was, indicated down as much as 2% Sunday evening, and it didn't do that. I was perplexed by that, I must admit.
You and me both, David. You and me both. So would you buy the euro now, or would you short the euro now?
I'll tell you when I would buy the euro. If they, in fact, had the resolve to force Greece into the drachma, I would buy the euro. I think the euro it would show the other member states you cannot do this.
Right. Better get on board.
That would be the only time I might consider it.
All right. Well, what was also interesting is what's happening in Chinese markets. Of course, the Shanghai Composite was the only market to rally, and that's because of Beijing's support measures.
And I thought it was actually, a disappointing move, frankly. When I was looking Sunday evening, it looked like China was going to be up as much as 9%. It only closed up 2.4%. This is the bigger issue.
Right.
We're talking about Greece, whose economy is less than 2% of Europe. We're talking about a loss in market cap in the last 3 weeks of about $2.7 trillion in the Chinese markets. President Xi has, done a lot to try to stem the tide here. They've instituted, lower interest rates. Pension plans can now buy stocks. They've halted IPOs, and now they've started a fund to buy blue chip stocks.
Right.
So I'm going to be very interested to see what happens in tonight's session.
Given that the Chinese markets are not looking so great, Europe's very shaky, Do you think that we could see a rally in U.S. markets, going with the analogy of the cleanest shirt in the dirty laundry basket, like the best of the worst? Do you think that that may drive more interest back into U.S. markets, which have lost a lot of their yearly gains?
I put it a little differently. I would say it's probably supporting the market right now from perhaps not falling. I think you're going to have earnings down year over year. This quarter. A lot of that is, in fact, oil. But even outside of the oil patch, the earnings are not that great. This is a pretty important earnings season for the S&P.
Let's talk very quickly about oil.
Okay.
It's not looking pretty.
It was a pretty ugly day for oil bulls. Look, around the world, we are producing so much oil. We really don't even have a place to store it. And everybody looked to Saudi Arabia to control and stem the tide. They are not blinking. They want to maintain their market share. They're going to pump full out.
Greece isn't blinking. Saudi Arabia isn't blinking. It's exciting times we're playing with. All right. Thank you so much. As always, David Nelson, Chief Strategist at Belpointe. Now,